Yeah, I think gold probably is more towards the 50. Yeah, if you go to 4,000, I think you could go back to 2,100 was a breakout point.
Hmm.
So basically almost 50% pullback. Silver is more industrial, more cyclical.
Mhm.
Silver could be a 70 or percent. So they're going to be
Yeah.
more like the market. But yeah, treasuries, I think, are one of the very few assets that will actually appreciate during the bust, and the dollar. At some point, the dollar. And then beyond that, it's, FDIC insured savings and not much else that I think can hold on.
And you expect the bust to begin before the end of calendar year 2025?
I don't know if I'd say I expect that could begin
It could.
late this year. Doesn't
Okay.
have to. It might.
Yeah, the data points can change. It could push out to
Yeah.
26.
But I'm pretty sure we'll be in it for all of 26 or most of 26. So whether it starts, the latter part of this year or early next year, I think 26 could be a rough year. I think it's a 12 to 18 month downturn. So depending on how fast they act is how fast it will come out. Yeah, you could be out of it as early as the beginning of 27, or it might stretch to the middle of 27, something like that.
Okay. And then we're going to begin the biggest boom in equities and commodities, basically,
Yeah,
in world
the
history.
market will turn up well before the bottom of the bust. When it's turning up, we're still going to be smack dab in the middle of the bust. But let's say the market topped out in August or September. And again, hypothetically, it's at the top, and the bust started by the end of the year. And let's say the bust was 12 to 15 months, so that you're out of the bust by the end of the first quarter of 27. You might be starting a bull market, the new cyclical bull market in stocks within a year of the bear. So, the bear might last 8 to 12 months, something like that. You could be even seeing a turn in the market in the summer of next year. But, again, I don't know. We don't even know when we're rolling over yet. But it'll start well before you'll feel like you're out of the bust. And then it's going to be a commodity-driven cycle, massive money, because it's not just the Fed, it's money out of every central bank to levels they've never done before. And that includes, people back China. It'll be everybody printing money like there's no tomorrow. With a lag, and that lag probably is a year or more, you'll begin to see the results of that, the green shoots and demand coming back. You're coming out of, I think, a deflationary bust. So you're coming out of negative inflation and a very deep recession, and banking system broken and having to be repaired. But you will see all that money will jumpstart a recovery, and the reason it doesn't take 5 years to get through like a depression is because it's money. It will begin to fuel demand in various places. Consumer, even I argue that consumers not only going to be facing potentially an 80% drop in the stock market, probably a 30-40% hit to their homes, their assets are going to be really floored. The pension funds are going to get killed, so that'll be down. So the consumer is probably going to be slow to be the igniter, even though they're usually the early push. I think the story will be reshoring and all that Trump's trying to do. I keep saying that a lot of what his policies are, deregulation, all those things, are going to be very much appreciated on the other side of the bust. They're not going to have much impact to prevent a bust. I think on the other side of the bus, they will help reignite the economy. It'll be industrial driven as we build factories. Factory building or bring manufacturing back here means a lot of demand for commodities. Whether it's steel, whether it's aluminum, whether it's lumber, all kinds of commodities, I think. And the problem is when you put 20 trillion into a system, it ignites demand, and the demand is you can look at it from the money standpoint, but then look at it from you're going to blow up demand so much faster than you would normally. And we've been for 20 years probably rationalizing down our capacity in commodities. We've discouraged mining because, prices were lower. You look at oil. Oil's one of the commodities. Oils, we haven't been doing a lot of deep water drilling because we haven't had to. So all of a sudden, you're going to have this huge demand in energy, for steel, for all kinds of commodities, and they're not going to have the capacity to satisfy it. So the only thing that can go then is price. You're going to have massive demand outstripping, and price goes through the roof. So I've said $500 oil is a real possibility by early next decade. It's not like it all happens first year or two out of the bust. Commodities cycles tend to be shorter. They don't play out over 15 years like we've seen this cycle. 5 or 6 years, certainly. So I'd say early next decade, that doesn't mean 2030, it might be 2031 or 2, but early next decade, we'll be at $500 oil. And I think oil goes to 30 in the bust. So you go from 30 to 500. Copper, which I said can get $6 pre-bust, could go to $1 or $2 in the bust, and then go from there to $20 or $25. If you want to talk inflation, yeah, it's going to go straight through the roof.
Well, copper at $25 will get you there pretty quick.
And then people go, well, how are we going to survive that? This isn't something anybody can engineer. It's the forces that all come together. We're at the end of what I call a 90-year supercycle. We're in the last decade of a 90-year supercycle. All those excesses and the built up cycle to cycle to cycle from 1940 on, we're now at the point where it all explodes into this.
The debt monster coming alive.
Every cycle, it's taken more money to pull us out of that cycle, and we're now at the point where 2008-9 was a biggie. We're about to ratchet it up from there, and that's why it just explodes.
The granddaddy's on deck. Silver to 500, gold to 20,000. Have you changed those targets?
Yeah, that's still my numbers.
So that inflationary boom is going to last 3, 4, 5 years, and then we're going to enter this greater depression. I saw a glimmer of hope there. I saw a little bit of a silver lining in that some of Trump's policies may soften the blow and allow us to muddle through that period. Is that what I'm hearing?
Yeah, if I'm going to be wrong, because I still do think collapse is the most likely scenario, but if I'm going to be wrong, Trump's policies are going to work in spades, and we're going to have a freer world trade situation where, the thing that's hopeful, and yet it's so much to overcome that I'm skeptical that it'll happen. He is doing yeoman's work and trying to fix this thing, but it's a huge thing. To think that we could actually shrink the government pie and get back to capitalism and letting the free market, which is much more efficient, do a lot of the things that we've been. As you hear these stories and see what Doge is uncovering and all kinds of places and a lot of the corruptness, it looks like we pissed away trillions of dollars just in the last 5 or 10 years. Trillions. And we're sitting here acting like, gee, if we shrink the government, what are we doing? But now we're finding out that literally trillions of it is going into people's pockets, corrupt politicians' pockets, and all their hangers-on that are with them.
Not just in America, but around the world.
Right. We're just handing out money left and right. These NGOs are just basically money laundering schemes. If truly we can tackle that and the courts don't stop everything, there's hope that as bad as it was, as awful, as we're pretty resilient. Our system to have withstood this tells you we're a pretty resilient system. And if we can get halfway back to being a normal system without this graft, that maybe there's a glimmer of hope. As much as I'd like to believe that, it's a Queen Mary, and I just, I'm still skeptical that we can truly. Because it's not just the U.S., it's the world. We got debt through the roof everywhere. This is really the point of why I'm skeptical that it can happen. If I'm right about what inflation is going to be post-bust, if the next cycle is truly going to take us 25% inflation, how do you solve the debt equation? Interest rates will follow the inflation. And I was in the business in 1981 or 2, we had 21% T-bills at that time. We had 15% long bond at that time. This time could exceed those numbers. How do you solve the debt equation? And we can't fund it at 5% or barely fund it.
This is what I mean.
So it's very hard for me to see how we get